Good morning, everyone, and welcome to the European crossover webinar. So we did see a pretty big reaction after the FOMC day, and I'm glad to finally get us kicking out and moving on here. Now, a couple of things that we can look at is look at gold. Keep an eye on gold here. We have finally reached our target here at 1323. If you remember, we had been actually looking for a target of 1304. Initially, gold was trying to pare back, and despite the resilience of the dollar and equity markets, we were able to hold this area. And at that point, as the dollar started to turn weaker last week, then we were looking for a move up here to 1323, and we've hit that. That's confluencing with the 78% here. We've also seen the dollar going and pare back. Let's take a look here. You can see here we're just holding up. We talked about this yesterday in the chat room, about 95.35 being a support, in the dollar at the time. Now we've tried to dip a little bit lower. We're still holding here, and obviously, certainly we saw a big impact here with the euro, which is turned around here. See right here, and of course, as mentioned, looking across the board. We're going to get to those others, but we've even seen the Aussie dollar going to make its move here. Also, we'll come over here. Big run up in here in the Aussies. It made its run and took out these prior highs and made a run up here. Actually, look at here, coming right into this resistance level of 72.76. Now we do have a bit of dichotomy. A lot of people expected the bond market to go on and sell off, okay, and really have a tough time. And we've actually seen bonds and also bunds really have a very, very big reaction. Let's go and move this over here. Take a look at these boons, and there's a probably good reason. We're seeing some very weak data coming into today. We'll get to that. Now, when I say a strange dichotomy, because most would have expected that now we would start to see as the Fed, we see this situation where you probably see bond rates really, people start dumping bonds, but I think the concern is now that the economy is really open to paring back. And so now we've got a bit of a mixed signal here as yields really make the move lower. And we'll take a look here as we come into, we do have UK housing prices stagnant, but look at this, German retail sales slump at the fastest rate in 11 years. Look at that, negative 430. Look, they were only, get this, the prior was 1.4. They were looking for a negative 0.6. Holy smokes, minus 4.30. The fastest slump in 11 years. That's kind of spooked this market. And when I say strange dichotomy, there's the old take is the bond traders are the smartest guys in the room. And so one of the things that we're looking at is, I think, is that people are really concerned that we could really start to slow down. Now, if you take a look at equities, they're still way up here near the top. But, that's going to be some tough stuff. And we come down here, we had French inflation, Spanish GDP right here. Came in a little bit better than expected. German unemployment, well, that's probably not to be a surprise because considering what we're starting to see right now, minus 2.0. The Reuters poll was for minus, take a look in here. Minus 10.0, but it only came in at minus 2.0. Coming later on, and we do have a Eurozone GDP at the top of this next hour, and Eurozone unemployment. I think the concern is really looking out as we're going to come in. When we also, let's take a look here. We've got retail sales coming in and use GDP. We also have Canadian producer prices, and we did see a pretty big move here with the dollar CAD. But as I mentioned, is that the concern is now is that are we, putting ourselves in a situation where the economy could really start to go and slow down? And that's going to be the concern here with going forward here. And one of the things that I think it probably has the market a little bit of, in a mixed bag here. We've got the euro up in here, and as I mentioned, when we'll look at, I did just some spot and Asian analysis where it looks like the euro can make a move eventually to 1609. But as I mentioned, that's going to be a bit of a drag here. I mean, Germany's the economic hub of the eurozone, and for that, the fastest slump in over 11 years. And really, I mean, when you look at this is amazing, but amazing in a bad way. I mean, if you think about it, the German retail sales were 1.40. The Reuters poll was, okay, we're going to see a little bit of a slide back, minus 0.6, and look at that. I mean, talk about going from 80 to 10 miles an hour. You just about got it right there. This is just, what a huge fall, minus 4.30. Now, we knew that the eurozone was slowing down, but how much further slow down? And then that probably takes us back to where we are with, as I mentioned, is going to be, well, where's the euro going to go to? Well, we did the Asian analysis here, and we put on here the euro bolted out of the FOMC gate and did not ease back a bit. Initial target is 1609 with a daily close pause at 1546. Now here's that, and there's that pause I'm talking about here that we can get to. We'll be looking at a couple other figures also, but we're going to get to the analysis. But this is what we're looking at here at potentially making a move to 1609. But wow, with those German retail sales, I think that we're open to moving higher. There's no doubt about that. And the market's staying well bid, but we might see a little bit of pause as we come into a little bit later into the U.S. session, I'm thinking, and then we'll see how the U.S. jobs market does. And so we'll look at a couple of figures there as to what may transpire. Let's go on and get on here to the cash dollar index and take a quick look there. Well, it says the dollar has fallen back to trend line support, and you can see right here, okay, with exponential moving averages suggesting a further move. Initial target we're looking at for is 94.54 with a move down here, potentially a move down here to this 94.10, which really isn't saying a lot. I mean, if the market starts to roll over, we may hang around here a little bit, because remember we were saying in the chat room, say 95.35 was some support for the day, okay? I think we can still make a move lower, but we may try and hang around here thinking that, hey, we'll still get a good jobs number, and then maybe we'll have the opportunity afterward that to go in and roll over. But like I said, these interest rate yields moving to, much lower is really a bit of a surprise and a concern as to where do we go from here. So with that, we'll just go and take a look here on the morning bid. Anyone in doubt about the impact, anyone in doubt about the impact of all the Brexit uncertainty need only look this morning at the UK car data, which showed output down 9% last year, the biggest drop since the 2008-9 recession, and investments slashed by nearly half. Wow. While several factors are to be to blame, the SMMT trade body cited the enormous damage done by Brexit uncertainty and warned of a permanent devastation in the event of a no-deal severing of existing trade agreements. That comes from a sector that employs some 850,000 people and is lauded as a rare UK manufacturing success. The EU's response to Tuesday's night vote in the UK Parliament has been unequivocal. This brings no deal a step closer because there's no way of renegotiating the existing withdrawal. Meanwhile, watch for indicators of a new cross-party push to avert a no-deal outcome. Conservative ministers knew they did not have to put their jobs on the line for this week because May said there would be a new vote in a couple of weeks' time. Now, February 14 is their window either to join forces with the like-minded Labour lawmakers or forge their own initiatives. Now going into the markets this morning, calls and response. Markets shrieked and the Fed came to the rescue. Whether the underlying economy really needed a rethink, a Fed rethink remains to be unseen, but Chairman Powell and the team are clearly leaving nothing to chance. The White House, for one, will be pleased. Wall Street and global stock and bond markets have rallied with gusto since the Fed indicated last night it would pause its interest rate rises while assessing the weakening of the economy. Crucially, it also said the rundown of its balance sheet or stockpile amounts it has accumulated over the past 10 years of quantitative easing could slow too. That ticked all the boxes to the financial markets, and major markets such as the Goldman Sachs revised down their expected rate hike trajectory for this year. Major Wall Street benchmarks gained more than 1%. Treasury yields fell to their lowest in a couple of weeks, and the dollar index retreated to its lowest since January 10th. Euro dollar topped 115 for the first time since the dollar index retreated to its lowest, and also the emerging market currency index rose to its highest since June and now is up 2.4% for the year. Now the attention shifts back to Washington later today to see if there's any positive developments in the second day of trade talks between the U.S. and Chinese officials. Earnings from Apple and Boeing also supported the market. European stocks, there's also plenty of corporate results to digest. Nokia will be in focus after telecom networks market equipment maker posted stronger than expected quarterly results. Looking ahead, we had German jobless news, retail sales. What we saw that, the biggest plunge in 11 years. Wow. Eurozone, Spanish, Italian GDP, Spanish December inflation. We saw the look on the nationwide house prices and that they were stagnant. And then we come into December personal income and spending. And let me see, that's going to be it. We do also have, we showed their Canadian data coming out this morning. Just a quick touch, as I mentioned, news will be a little bit more lighter going forward. But the dollar fell versus peers on Thursday after the Federal Reserve took a dovish turn. Central bank rates were steady but discarded pledges of further gradual increases. The dollar index can hit 93.50 if the support level 95 is broken, McCarthy said. And I expect commodity currencies such as the Aussie, Kiwi, and Canadian dollar to do well. Now, I remember that earlier in the week, people were saying that the Canadian dollar is going to have a tough time because it could be the Canadian economy will be more impacted than others, but someone else singing a different tune. U.S. currency futures have turned down even before the Fed signal on Wednesday. Analysts have accordingly turned bearish on the dollar, which outperformed last year thanks to the rates impulse and robust U.S. economy. Chairman Powell made the case for rate increases had weakened in recent weeks, citing cross currents such as slowing growth overseas and the federal government shutdown. Global markets have been rattled by a slew of weaker than expected data out of China and Europe, and the latest sign of weakening growth, the Chinese factory activity contracted for a second straight month in January, showed on Thursday, pointing to further strains on the economy that could heighten risk to global growth. No wonder we have these interest rates just coming apart at the seams. On to gold. And gold, like I said, today, we'll look at it because we've hit that target there at 1323. The Fed dropped a commitment to gradual hikes from its policy statement. Gold tends to rise on expectations of lower interest rates. Gold is getting a double whammy from a dovish Fed and U.S.-China trade talks, said Jeffrey Hawley, a senior analyst with Oanda. But 1350 is going to be tough to crack, and he needs more risk in the market to push gold higher. And lastly, we'll take a look at U.S. Eurozone. U.S. yields hit new lows as the Fed discounts rates. They're signaling the rate cycle may have already come to an end. They're getting flexible on the next rate response. Commerce Bank strategist Rainer Gunterman said that was the most surprising element. The balance sheet was already flagged, referring comments to the Fed balance sheet would remain larger than previously expected. This is in addition to the ECB's Mario Draghi's cautious remarks at the last week's ECB meeting, showing major central banks are responding to economic risks and economic weakness. The yield on the 10-year, the benchmark for the Eurozone, dropped 2 basis points to 1.62, tracking the U.S. Treasury yields lower. Most of the Eurozone bond yields were between 1 to 3 basis points lower, and Southern European bond yields also dropped across the board. So once again, let's go on and move right in here and move on to the analysis. And we'll get on with the euro. Well, looking at a more, I wouldn't call it macro outlook, but for me it's macro. I want to go into the daily. But so we finally got above this 1445. Someone was asking me yesterday, well, where would be, and generally I don't pretty much scalp. I'm just kind of jumping in and out and on these moves. And they had asked, well, what would you be looking at? Because I posted the daily chart in here, and I said, well, support's going to come in right here at 1446, which is this is the breakout area here, and you can see I usually like to go with just the touches here, and you can see the significance of 1445. We'd been saying that before. If you remember, coming into the prior day, not yesterday, but the prior day before that, you can see how they poked their head above here, and we were saying, hey, look, it's going to be pretty tough if they could close above 1446. They had done it 2 days prior, had come and they paired back. Well, the day before we got above here, and we even said we're looking at it as like, well, it might push as high as 1460, but we probably would see this market fade back going into the FOMC. Well, I thought it would have faded back more, but we made it up to 1450, and then the market rolled back because this was key here on this daily where we could close above it. Well, that's going to be support here, and coming out here at 1446, and we'd have to actually break just below 1392 for this market to stop itself out. If you're looking for an initial move coming in at 1546, 1550 with an eventual move, I'm looking here to 1609. You can see that coming across here. You can see the importance. Now that's on a daily close. I mean, we can't move higher, but this is what we'll be looking at. So where's support going to come in? Well, we're going to move it down here to 1446 if we get a pair back. This kind of rolls us into, let's say, NFP, if that comes in stronger, where we'd be looking to, bids would come in. I think bids would be solid right in here into, let's say, the 14, mid 14, lower 1430s. Now, where's resistance? Well, we talked about that. Remember, we had 15, 15, 1532. This is actually going to be today's resistance right now. And we're going to get to that. I'll show you that. Let's move on to the 2-hour chart. We're looking at this 2-hour chart, and boy, look at this level here. The importance of 1531. We call it 1531, call it 1532. 1 pip is going to make a real difference. But you can see here, when you look across the 2-hour chart, look, resistance, blast through it, support. Come back, support. Come back, support. Then the market grinds back and forth. Can't decide whether it wants to break lower, break higher. We get above, we come back, support, come back. We break through it, resistance, resistance. Get a little good, nice little move beyond that, okay? And not that much behind it because 1550. We roll back here. And so this is going to be, I believe, a pause area here for the euro. Now, it doesn't mean, like I said, think we could, when we look at the dailies and we're looking at the targets, we said 1546 and then 1609. But this 1531, any rallies here in the euro, it may have a bit of a tough time doing that. And why? Because as I mentioned here, German retail slump at the fastest rate in 11 years. And look at this. They were expecting minus negative 0.6. They just about blew this thing out of the water at minus 4.30. So I think in this case where the euro has the opportunity to try and push higher, and I was looking on a 5-minute chart earlier in Asia, and I was looking at a resistance at 1510, and the market, I think it made it up here to that's right, was it 15, 12, 14, something like that. But okay, it still has the juice here to try and make this move up here towards 1532. If they can make that move, I think you'll see a nice pause at that point. Look, they didn't let anybody out of jail, and I'm not sure why people would have wanted to be short going into the Fed, the FOMC, which they were already looking for them to be, and I think they filled the bill to expectations. And this market barely even pulled back, just a few pips, and still stayed bid. And when the Asian session, we pushed a little bit higher, came back, pushed, made one more little push up in here, which looks like about 15, 13, and now we started to pair back. If we do get this move here, when you look at it across the board, look at that. That's solid as a rock. And I think solid as rock as far as some good volume. So I think this is an area here, and we called it 1532, 1531, whatever you want to say, but there it is right there. Staring you right there in the face. Let's go and move into cable. Well, we made a pretty good run up in here. Market looking a little bit tired, but this is a market that's, to me, it's hard to call this market. It really is. With all the news that goes on, you really have yourself at a risk here. I've got this 3160 from yesterday, and it's going to still remain the same, 3160. And we had the support coming in at 3030. Yeah, we're going to go stay with this 3030 right now on the cable. Like I said, to me, it's a tough market. And I guess right now is where if we still do expect a pullback, and despite the data, we're still holding up very well. Obviously, because the dollar is open to moving weakening, but we're going to go and keep that one the same. No, I just don't have a good take on this cable at all. Let's go on and there we go. There. Let's go on and move in now with the Aussie. Now, I've had a pretty good, nice turnaround here. Look here, we made it right here to the 38% of this move, 72.76. Now, you might expect this market to pare back a little bit, but obviously they still have that bid if they can get some kind of good news out of this U.S.-China trade talks. But we've made it right up in here. Look at that. Right to the 38%. If we get good news out of the China trade talks, this thing will blow much higher. Resistance at this point is going to come in. Daily close resistance is 73.03. But this market can move higher on that good China trade news if we were to get it. And there we are right there, that level. We'll go right there. 70. Well, there's your 7303. We'll call it 7303 on the resistance. And support will come in right there, 7227. 7227 on the initial support. If we get some bad news, we can go on and pull it down to right there, 7212. But we'll go 7227 for first blush. And let's go into the dollar Swiss. This market has continued to hold up relatively well. When you consider the other pairs. We didn't even make it down to the 9902. I think this market is a really tough market to trade if you're not holding on. Because, like I said, when you look at this, you think you'd be looking at maybe this would be a 30-minute chart, maybe. And you look at it, and these are 2-hour bars, and this market just simply isn't moving around a lot. But resistance is going to come in right there at 99.54. And for its rotation lower, 98.92. Well, it looks like we made it here to our target. This was the target we've been talking about when we started out the week on the analysis, and was just 31.20, and we made it down here at 31.18. So here's the 61%. And this is what we were looking for the market to go to at the beginning of the week. Let's go and take a look at it here. So we've reached that target. Crude oil still has a nice bid at 54, still holding its own. Resist support. We're going to call it 3102, but we've reached this target here. So you expect a little bit of a bounce back. 3102. We don't know that this is the bottom yet. We don't. So I don't like to do this, but we're searching for, I'll tell you what, we'll move to a 30-minute, but we're searching for the up level. Let's go here. Boy, this thing really felt like a rock. Then we would look on a very short-term basis. Hang on. But we don't know that this is the reason I don't like putting this is we don't know that that's the bottom. It would have to go and improve itself. It's a tall order to get to 3182. Let's see the 31. Okay, we'll just go with 3180. 3180 for resistance. If we do get a snapback. And crude oil just holding up here, right here, just above this level, this 5404. Comes in right there, 53.92. Go and take a look at it on the 2-hour chart. We've had a pretty good run here in crude oil. Don't forget, as I mentioned, is okay, they got to get it out of the jail card. And I guess this probably would have been expected if you're taking into consideration the Fed easing back. Is that the day before? Remember, we had a pretty good little monster rally. And we pushed even further. Blake even made a good point. Blake himself made a good point. It was right after the Fed, and he goes, I think he said something like, interesting or something. Crude began to fade a little bit. I guess maybe he was talking like right in here. Here's the concern, and why I think we may be able to pull back is, once again, the concerns here we go back again, global slowdown. And look at that. This is just, I just can't get over this figure. Retail slumped the fastest in 11 years. And like I said, that's just a whammy like nobody's business. They expected a pullback of minus 0.6, and they got minus 4.30. So once again, not that everything's going to go to heck in a handbasket, but you would think, look how far we've come back. You see what I'm saying? So to me, I just don't know what this, if the economy is, they expect the economy to slow down a bit. It's going to have a tough time right in here. See that coming across? So let's highlight this. It's going to be 54.28. 54 right there. 54.28 for resistance. coming into the 23% pullback. I like a move down here, this 38%. Now you'll find some support here around 53.60. Let's go right there. I think we can eventually move lower, but let's go right here for support, which is going to be 53.60. But that's very short-term support. I could see this market pairing back a little bit further, and I'm actually, let's go with 53.43 coming across right there. 53.43, which is just a little bit above that 38%, but go right there, 53.58, 53.58. You know, one of the reasons one of the reasons that crude oil had fallen so far was the whole idea that the global growth demand, and it felt like a rock. Now you turn around and sprinted as equity markets had calmed down, they got really overdone. But now, you know, as I said, now you're seeing interest rates across the board fall back. So once again, this 53, look, they're really tearing through this 53.58. I like that for a bit of short-term support. But this, I think, is going to be good, solid resistance right there. It could actually be a marker for a stop loss here. Let's go and move into the dollar yen. Well, we finally saw a pretty good move here, and it continues to weaken here. As we finally broke below this pivot, this 927. And remember, this was the big trade, and then the market came back, and then we got above the 927. The market just vacillated back and forth, and we even saw this above the 957. I remember just getting stopped out right in here, or just maybe just a few pips just above, as this market looked like it wanted to try and push even higher, but it was struggling to find its own room. And now we've started to rotate a little bit lower. Maybe we are going to start to see this as a weakening, but we haven't seen it yet in equities, but maybe we'll start to see this come in. But where would support be? Well, we probably came in right in here. So there's a little bit of support there at the 869, but we're even below that now. So let's go and take a look at where we stand on a 2-hour chart. There we go. That's going to be support right there, short-term basis. $8.55. Yeah, we're just in the middle of these fibs and just below the 23%. So we'll go with 8.55 for support. And resistance, you can see it right there, 8.93. Right there, 8.93. I think the Fed finally tilted the wagon. And with that, we'll go into the Aussie Yen. This was really trying to push higher, And we're still in pretty good shape here. I mean, the market doesn't want to give it up. We slid back, but we do really have cross currents at this point. Resistance. This is a bit tricky because of we get the U.S.-China trade talk, so you can see an extra pop. For the short haul, it's going to be right now. They have to still keep this in check. It's going to be right there, 79.20. But you got to be careful with this. This is going to be headline driven. 79.56 is huge. Maybe you want to go and keep that as a target level. So here's what we're going to do. Let's just call it. There we go. If we get Bolton high on this news, keep it on that 79.56 on the stretch. Now, you got to be careful with this one because of the impact on that, but support would come in right there at 78.62 for now. And let's go and move on to the cash dollar index. Well, after the FOMC, we talked about resistance, some support coming in at that time at 95.35. We dipped a little bit lower. I think we got to 29, and then we moved a little bit back up. But it's the key thing is that we're just below here, this little support level. And I think that after sitting here, we talked about the EMAs. Now we have the opportunity to try and push this lower. As I mentioned, we did the Asian analysis. I posted some on the basic technical and put here the dollar index has fallen back to trendline support with exponential moving averages suggesting a further move. So you can see here where we tightened up right here and then we rolled, and that opens the door for us to eventually resolve ourselves lower. Okay, that's what I was suggesting, a further move. The initial target is going to be 94.54. Okay, we're looking on the daily right here, 94.54. With a secondary target of 94.10 being the 38%. So I think that we can eventually resolve ourselves. The market may want to hold steady here as we go into NFP. So now we're looking at the little overall perspective. I think we're open now that we can push lower, and the market's open that for a lot of different reasons now that the Fed has now relented. We saw this big move here. If you look at the exponential moving average, you see how wide this differential got, and then we came back in on this rally, so we came close, and now we're open to rolling lower, and we go and take this out. So I think that market's open for the 94.54, but tomorrow's NFP, seeing weak data across the board, where do we go from here? Probably see a little bit of stabilization. So resistance then would be that might be a little bit close to say 49, but you're going to see it all bunched up in here. So let's go with the volume there. 94.54 for resistance, just about 95.56, and that'll probably be a little bit of a stretch there, but we'll look at 95.56 for resistance for today. And we know about that big pivot. That would have to get above that to change things back. 95.56. And for support, I don't think we're going to rotate lower, but support would come in right there at 95.04. We had 03 already. And there's our 35. Someone's asked me, yes, sir, where is it? And I go, well, 35. But that's when post that bias chart, and we held there. I mean, we dipped. I think we got down to 29, then we popped back up, I think, to 40, and then we just kind of hung there. So we'll go with 95.03. And we'll go into gold. Well, gold has reached the target we were looking for, which was 1323, which also confluenced with the 78% right here. You can see there, good solid line, right? Coming across 1323, confluencing with 1322, the 78% of this entire move of 1160 to 1365. Now you can start to see a little bit of a pause, but once again, with gold rotating with the dollar, potentially rotating lower off the dollar index. Now a lot of people are talking about 1350, kind of like an even number. Once again, it doesn't mean we're going to turn around and roll over right now. It just means that you may start to see the market have a tough time trying to get beyond that. I'm going to stick with the 1323 here. Now, there's a little level right in here if we want to push higher, 1330, if they want to make this extra push. But for right now, I'm going to stick with this 1323. There's a door open for 1330. And I think maybe they'll get a few more people that'll come into the party late and may push it up to 1330. Who knows? If you look right here, you see this right there? That comes in right there at 1333. So that's a level you could look at if they want to push higher. But for right now, I like this 1323 for today. But I think we could push the as in a little bit of what I want to call it, stretch target, 1333. 1333, straight right there. You see right here? Right there. So a little bit of a stretch target there at 1333. But for right now, and I think the door's open to push. You probably have some people still trying to push into gold. I'll still go with this 1323. That was the target overall. There it is, 1323. Support, let's look on a 2-hour. It's going to come in right there. That's going to be tough. On a very short-term basis, let's look for 1315. Thinking that this will retain its bid. On a short term, it's a little bit, let's give it just right there, 1314. And let's go and move into the buns. Well, we've talked about this before. Years ago, since so long, but probably like 3 years ago, you could trade the euro and the bunds. We talked about that one of the webinars. You could trade those almost in synchrony. Okay, the bunds move to high. As bunds move higher, you just sell the euro and vice versa. Well, once again, one of the reasons we've got the bunds moving higher is, I hate to pull it back up, but I got to, because this is huge. German retail slump at the fastest rate in 11 years. Last month was 1.40. They were expecting a good little slowdown to minus 0.6. We went from positive 1.4 to minus 4.3. If that isn't slamming the brakes on the car going 80 miles an hour and going down to 10 miles an hour, I don't know what is. So henceforth, we got the bunds up in here. That's why the euro we may end up seeing that pullback that we talked about to 14. I don't know if we'd make it to 14.45, but once again, I thought this morning they had that bid. They weren't letting any shorts out of jail. So I thought there's an opportunity for us to push up to around that 1531/1532 area here. And then I'd be getting the heck out of Dodge on a very short-term basis. But like I said, here we are. Boy, holy smokes, we are just keeping the move up here. And when we started out the webinar, one of the things I was focused on was the old story back from some time ago. used to call it the 80 from the 80s or 90s, the bond market, the bond traders are the smartest guys in the room. And so you always want to keep a look at where the interest rates are, because supposedly they're going to dictate where everything eventually resolves itself. Well, now we still have some good news, and we're hoping for good news in case China and the U.S. get those trade talks together. They may, but once again, at the end of the day, is once we get past that, we look for that. That might be a potential good news. But we covered that in the morning bid. The China data contracted again for the second month in a row. So it looks like we continue to slide there. So they need to give some kind of a news. Matter of fact, if we do get some good news out of the China-US trade, that might be a pretty good run up here for the Aussie, and then maybe from there that might provide some opportunities to go on from a longer term basis to go the other side for a pullback. So that being said, let's go and take a look at this on a daily, try to get an idea where the heck we're at. Resistance is going to be 65.53, and we still can push higher depending on how high where we are. We're way down here, so it seems like that's a bit of a stretch, but we've already made it up here to 65.32. So we're going to go with that 65.53. Support. I don't think anyone's trying to fight this thing, especially after that German news. Support's going to come in right there, 64.96. I think that this may have gone as far as we can go for a while. Look, they got the good news on the rates, but reality has to set in here. So, and this is where I would have put resistance right there, 11,295. And we've already come up here. So I'm going to say resistance now, right there, 11,264. 11,264. But I think it would, at this point, it's going to need to rotate lower. And support's going to be right there, the 23%, 11,079. There's also going to be, remember the thought about, end of the month flows. We'll see how that all plays out. Hang on. Well, they're still stretching this thing out for all it's worth. And maybe we do get that Chinese good news on his. They need something. China needs it bad. I can tell you that right now. I don't want to sound like Trump, but they really need something. Here's 27. So if we stretch a little bit further right there, maybe we could stretch it up to 27.15 on some good news. But after that, as my dad used to say it, that's all she wrote. I think that may be it at that point, which takes us now back here to the Aussie Yen. And so we've got 79.20, but here's at 79.56. Keep an eye on that if we get the good news. Heck, we might even try and blow past that, but this will be key right there. Because of right here. You see this dip here? Then hold here, rally here. So we'll want to keep an eye on that. So we got gold still holding here. They're also probably waiting for the same thing with the Chinese news. Gold wants to hear anything that's going to be tough for the market. Gold, the secondary target would be the 1333. We'll just keep the 1323 because that was the target. But can they blow a little bit higher? Yeah, I guess 1333 here. The euro, once again, keep this in mind. And for those that may have come in late, look at this 2-hour chart. There's that resistance for today. 1531. Watch this. Pull this back. I posted this in the room in Asia. Look at the significance of 1531. That's important. 1531. So if we do make that run, I look for a nice little pause here in the euro, especially ahead of NFP, but right there. With that being said, thanks for joining us here on the European Crossover webinar. I'll post this and we'll see you a little bit later on in the room. Thank you.